Hi everyone, today let's take a quick look at bonds, as well as sentiment. Then we have a massive week of earnings coming up. Then we'll get into the charts. Then we'll look at my results for the week and my thoughts going into the Monday session.
If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started.
So bonds are continuing to get more and more appealing. And we've been talking about this on the channel for a while, but the yields are really starting to get attractive. They say it makes sense to continue to buy the 40% of the classic 60-40 portfolio. And recently that 40% has really not made a lot of sense, but now they're starting to look a lot better, and it makes sense to start putting some money into that side of the portfolio. And you can see 3-year Treasury bills yielding 5.45%, massive yields for such a short duration with very little risk. 2-year, just a little bit less. And this is what we've been talking about with the yield curve, not giving a lot of money for that time duration. 5-year and the 10-year sitting around 5%. Typically, these numbers are higher than the 2-year, but we're still inverted. And then finally, the 20-year sitting up around 5.25. Either way, these yields are pretty attractive and way more attractive than they have been in a while. Of course, bond prices have been going lower, but if you can start locking in these yields without any risk to that money, it might actually be worth it for the longer term holder. They also lay out some of the risks if we do see yields go in a particular direction. So if we see the 30-year Treasury go up by 300 basis points, which is pretty unlikely, you would see a 30% decline in the 30-year Treasury. But if they were to fall 300 basis points, then it would increase by 74%, which is equally unlikely, but that would be a massive return. In terms of the charts, we've been watching TLT topped out around that 170 area, and since then it's declined all the way down to 85. And you can see how that volume is picking up pretty dramatically. I think people are really starting to buy into TLT as it does provide a lot of exposure to bonds. And like I said, these yields are attractive. In terms of opportunity, right now the 1 to 3 month Treasury bill is the best available. It has very high yields and the shortest duration. That won't last forever. Eventually you'll have to go into longer term securities. And then they recommend TLT or the 7 to 10 year Treasury ETF, IEF, or even higher yielding corporate debt. Moving over to the AAII Sentiment survey, we are basically in line with historical averages. Bears a little bit higher, bulls a little bit lower, but really close to where we've been historically. You can see last week we had a ton of bulls in the market, but then the market dropped pretty dramatically over the Thursday-Friday session. We'll take a look at that on the charts, but that has cut into the bullish percentage. And as this continues to swing here, you have to wait until you get into a more extreme range in terms of bullish weakness and a higher percentage of bears before this indicator really starts to make sense. Similarly, moving over to fear and greed, I would expect this to dip into extreme fear this week. You can see that breakdown that we had on the charts pushing into extreme fear. Big move down, retest of that 125 moving average, and a bigger breakdown, indicating that there's more downside to come. Stock price strength also showing weakness. Breadth did have a feeble bounce, but it is rolling over once again here. We'll look at that later on the charts as well. Put-call ratio continues to rise, getting above that 1 for all equities. Anytime you're above 1, that is an extreme fear read. Volatility continues this breakout. We talked about it. Breakout, retest, continuation. We're above 20. We talked about that in the Friday video. Safe haven demand continues to be in extreme fear. And then junk bonds back into extreme greed as the outlier. People are still holding junk bond demand as we haven't really seen any bankruptcies from these more zombie type companies. And as long as you can hold to maturity, there's no issues with holding this kind of debt. Moving over to the economic calendar, nothing on there for Monday. Looking at Tuesday, you have global services PMI at 945, 2-year note auction, also interesting. These auctions have been a little bit more relevant here recently as they continue to weaken, which pushes yields higher. Looking at Wednesday, building permits, new home sales, and then you have Fed Powell speaking at 1635. The last time he spoke, it was pretty relevant. Markets did react to that. This might be another one of those more interesting ones. Thursday, core durable goods orders, as well as the headline number. But the big thing here for Thursday is GDP and GDP price index at 8:30. Then you have Fed Waller speaking in the afternoon, pending home sales at 10 o'clock, and then the 7-year note auction. Finally here, Friday, another pretty big piece of data here with core PCE and headline number at 8:30. And then you got the Michigan numbers later in the morning, and that'll wrap it up for this week of data. Moving over to earnings. Basically nothing here for Monday, but Tuesday going to be absolutely massive here with Microsoft, Google, Visa, Coca-Cola, Texas Instruments, Verizon. You also have Waste Management, Sherwin-Williams, 3M on Tuesday. Going to be a massive day on Tuesday. And then looking at Wednesday, you still have Meta, T-Mobile, IBM, Boeing, a couple of big companies, General Dynamics. Then on Thursday, you have Amazon, MasterCard, Merck & Co., Comcast, Intel, UPS, Honeywell, Bristol Myers, Altria, American Tower, Northrop Grumman. Massive week of earnings. Ford Motor, Chipotle Mexican Grill also on Thursday. And then looking at Friday, we start getting into oil and gas, ExxonMobil, Chevron. Also have AbbVie, Colgate, Palmolive in that staples category. T. Rowe Price also could be interesting. Moving over to Max Pain for the Friday session. Quite a bit of options here. 1.25 million for an off week. 3.5 on the put to call ratio. That is very high. That's much higher than what we've seen here recently. Max Pain sitting at 433. But look how many options there are here. Way out of the money. Definitely interesting going into this massive week of data and earnings. Put wall still here at 420. Not as strong as it was last week, but might hold up. The bottom of the calls is sitting around 417. So we're pretty much there already. Of course, this chart will adjust as the week goes on. But right now it does seem like we are just about 1% higher from as low as we can go this week. And just look how few calls there are. Just a couple of little spikes, way smaller than all of the puts here going into this week of options. Moving over to the charts, starting off with the S&Ps here on the weekly chart. You can see we were down a little bit over 2.3%. Big bearish momentum on the weekly chart. Continues to break down here on the RSI, well below the 50 line at this point. You can see we are at trend support. So if it's going to hold, it really has to do it right here. Critical point going into this massive week of data and earnings. Got the 144 week moving average sitting at that 420 area at this longer term trend support. And then you got the 55 week moving average sitting at 41.43 right here around that highly traded zone. You can see it around that 41.20 area, basically on top of each other. And then if this area breaks here, you can see there is some support sitting around 40.50. And then you have the 200 SMA sitting all the way down at 39.35, which there is quite a lot of volume in that area. You can see this consolidation before we had this move higher. But right now, this looks very weak, and it looks like it might accelerate here in the week to come, especially if this little area of support does not hold. Moving over to the daily chart, you can see we are just off of that trend line. You can see the confluence of trend lines and horizontal support around that 417 level, just like we talked about. Momentum continues to roll over here. I would expect this to make a lower low, getting at least into that 417 range. Like I said, that's a 1% down move from current levels, so I would expect a little bit more follow through. We did have 3 candles in a row, so you might see a little bit of a pullback, but either way, I would expect to get into that range. Below that, I have 410.54, but we're already below the 200 SMA on the daily chart, meaning that this is a more bearish structure now than it has been in a long time. Daily chart below all of the EMAs and SMAs. Moving over to the NASDAQ on the weekly chart, down almost 3%, 2.9 on the week, right to these lows going back to September 25th. As well as the October 2nd week. So we're right in that same range. We're not at the bottom of this channel like we are in the S&Ps. That would be a pretty substantial move down, about 400 points, but we are back into bearish momentum. RSI looks like it's going to cross the 50 line this week, and I would expect this to follow through to the downside based on what we're seeing on the S&Ps. Of course, the NASDAQ is going to be dictated by earnings this week. Almost all of the biggest players are announcing earnings. If they come in hot, maybe we could see the NASDAQ break higher, but if they come in weak, we could absolutely see a push lower back into this support range, or the 144 EMA sitting down at 13,685. Moving over to the daily chart, you can see my next level to the downside, 353.24, just behind that 144 EMA. You can see it is marking those lows from those 2 weeks that we talked about on the weekly chart. I would expect at least a test of that level. It's only about $1 lower from current prices. Momentum stepping towards bearish. Volume on the last 2 candles, super bearish. You can see we've taken out the longer term EMAs here. And then even if we were to test that shorter term downtrend line, that would be down around 350. So everything's saying that we're going to see some lower prices. Again, will be dictated by earnings if these areas are going to hold, but overall the structure is a little bit more bullish than the SPY. Just because we haven't taken out all of the EMAs and SMAs yet, the 200 SMA on the daily chart is sitting all the way down at 337.27, which would be a massive move lower from current prices. Moving over to the Russell on the weekly chart, you can see this sell-off has accelerated. We've been selling off since the end of July now. We've only had 2 green weeks, one at the end of August, one here towards the end of September, but we are getting pretty close to where you would expect this to culminate. We've been talking about 164 for a long time. We have taken out these lows here from March and April. Now we're looking at the June and October lows from 2022. If these levels break down, there is a lot of room to the downside. We've been talking about that for a while here. Critical level at 164. Next templated area for me would be around 153 or another $10 of potential downside. It's also worth noting here that we are below the pre-COVID highs on the IWM. So critical week, watching 164. If that breaks down, I would expect a lot more downside over the coming months. Moving over to the daily chart, in terms of levels, you can see we're below 167.50, watching 164. You do have a little bit of trend support around 165.71. That could be interesting. Bearish momentum. Volume continues to pick up on this down move as it continues to accelerate. And this could absolutely go significantly lower. We're also bearish on the year now. The IWM is actually down 4% year to date, which is much weaker than the other major indices. Moving over to the Dow. On the weekly chart, you can see a big bearish candle, 1.63% on the week, engulfed the previous candle. We did have this wick low on the 2 October week, rallied up slightly, but now we have a big confirmation down. You would expect that to continue. We're below all of the EMAs. You still have the 200 SMA sitting at 317. Dow also crossing into bearish territory year to date. So the Dow and the Russell participating pretty closely together. Dow doing just a little bit better. It did dip a lot lower here relative to the Russell, getting all the way down in that 287 area. Zooming out, you can see that 287 was below the pre-COVID highs. So it's still holding up a little bit better with those larger cap stocks. But looking at this volume profile, you can see if it breaks down from this area, basically right where we are now, there is not a lot of volume through this zone. And if that 200 SMA breaks, sitting at 318, it would not surprise me if we pushed significantly lower back into that pre-COVID range. Zooming back in here into that shorter time frame, 329.40, we've been watching that level. We hit it with that wick on the 2 October week. I would expect to hit that at least one more time. Next level for me, 325.74. You can see we touched that level going back on 22 May, and then the next dip low sitting around that 318 area with the 200 SMA. Obviously, I don't think that's all going to happen in 1 week, but right now this does look like a very bearish structure. Moving over to the daily chart, you can see that same structure rallied up, hit the 200-day moving average, broke down. We're below all the EMAs and SMAs on the daily chart. We're out of that highly traded zone. Momentum continues to sell off. You would expect this to at least hit oversold conditions, which would give you at a minimum a double bottom at this previous level. So looking for about another 1% move to the downside. And then, like I said, 325.72 at that next level. Moving over to the equal weighted S&Ps on the weekly chart, you can see we are very, very close to that 200 week moving average, 136.47, just a couple of cents off it. We're below my level at 137.23. Go ahead and add 2 more levels as we had broken below my lowest level, adding one here at 134.14, right at this wick low from 31 October of 22, and then the next level here at 131.05. Right at the low here from 21 June, again from 2022. We'll continue to add levels if necessary here, but if that 200 SMA breaks, we're going to be below all the EMAs and SMAs on the weekly chart, and that is going to be a very bearish development. Momentum continues to accelerate to the bearish side. RSI continuing to move lower, not oversold yet. Again, everything looks pretty bearish. Zooming out just a little bit to show that longer term potential. If that 200 SMA breaks, you do have these dip lows from June and October of last year. Otherwise, if those break, then you're looking at the pre-COVID highs down around 118, which would be a very substantial move down, considering that the highs were all the way up at 165. Moving over to the ratios, copper versus gold continues to break down dramatically. People moving into security of gold and out of copper, indicating that industrial type activities are slowing. Copper typically grows in price as economic activity increases, but right now we're seeing gold go higher and copper go lower. We took out this previous low. Next level around that 17 area, which does not look great. Bearish momentum, bearish RSI here, indicating that the markets are potentially going to go lower as well. Moving over to SPY Russell and NASDAQ SPY. SPY Russell on the week actually did not do much of anything. They were both moving down pretty much at the same speed. NASDAQ SPY also sold off a little bit. NASDAQ underperforming the SPY. Still have bearish momentum, but it's still holding up in this range above that 343 level. We're also still above all the EMAs and SMAs, so it could just be a short-term pullback. The NASDAQ is very heavily weighted towards those larger companies, which I would expect to outperform in an economic downturn. They're kind of viewed as tech, but mostly as security at this point, in my opinion. Moving over to SPY divided by the M2 money supply here on the weekly chart. Looks like this 22 area has marked another top, so we had the all-time high, most recent high, hitting that same level, and we have sold off dramatically from that point. We've now taken out two levels, closing below 2050. You have the 144 EMA sitting around 20, and then my level here at 1992. Momentum bearish, RSI very bearish. And the last time we had a move like this off of this level, this was just the initial push. We ended up getting a bigger continuation down to these lows around 17. And zooming out here, you can see if we got into that 17 area, that might be a nice little opportunity. 17 is a pretty low level for this ratio, going all the way back here to the highs from November of 15, as well as August of 16. Also hit that 17 level here in December of 2018 before we had a really strong bounce. Got all the way down to 14 on that COVID dip. Then we had that monumental rally back up to that 22 level. So very critical coming off of that 22 level. And if this structure continues, you would expect a push back into this range between 17 and 19 at a minimum. Moving over to Apple and Tesla. Apple had a pretty bearish week, 3.34% to the downside, coming off of that bullish candle in the retest of VWAP on the weekly chart. Still watching 170.90. Could hold that level, could hold trend support just behind it around 170, but bearish momentum, bearish RSI does look much weaker now. Big down move, retest, consolidation, retest. I would expect that third move to the downside to break through, especially after this colossal up move. Nothing goes in a straight line. It's still holding up pretty well, but they do have earnings next week, which could be interesting. Looking at Tesla, obviously a massive bearish week, 15.58% to the downside. Obviously bearish momentum, bearish RSI, everything looks super weak. We are right at the lows going back to the week of 14 August. Still watching that 55 EMA at 206.61 and the 200 SMA at 205.98. Could be an interesting area worth watching. If we test that level and hold, certainly could be a level to trade off of. I wouldn't expect that to happen just because this move was coming off of earnings. And typically when you get a catalyst like earnings, it tends to have a little bit more follow through in my opinion. So right now, everything looks quite bearish. And you have this downtrend line sitting all the way down at 187 or so. And that's really where I would expect this down move to slow down. Moving over to Microsoft and Google, the two biggest companies announcing earnings this week. You got Microsoft, looks like a bull flag for sure. Rally up, flag set up. If we get a breakout to the upside, could be an absolutely colossal move. This was a huge move into the flag, and then it could be a huge move out of the flag if it does work out that way. Microsoft is usually pretty good about earnings. Obviously, if this trend breaks down, we could look at a move down to the 55 EMA, down around that 288 area, and this previous consolidation. Momentum holding strong here. It is stepping towards bullish going into earnings, which is interesting. Does give you a little bit of confidence to the upside potentially on Microsoft. Google, on the other hand, looks like it's in a rising wedge at this point. Continues to chop in this zone. And typically these break out either to the upside or to the downside and then get a bigger move down. So you can get something like this where you rally up and then break down. or you just get a straight breakdown. Either one is possible. And it is pretty rare to see these kind of continue through this zone and then rally higher. It's not impossible, it has happened before, but typically this is a bearish setup. In terms of levels, currently sitting between 133.87 and 138.21. Moving over to staples and discretionary. Staples up 0.7% and discretionaries down 4.58%. So clearly staples holding up stronger. We did have a bigger move down here first in staples, so it is a little bit convoluted, but we're now holding 66.27. You would expect that level to hold based on price action so far. And we did see momentum step down here on the weekly chart, meaning that this could potentially move higher. I would expect it to based on what we've seen here recently. Discretionaries moving much, much lower with Tesla, bearish momentum, bearish RSI. And at this point, I'm watching that 146.59 area, that highly traded zone. I have a level at 147. I really wouldn't expect this to stop before we got into that zone. It's currently sitting on the 55-week moving average, 151.68. Certainly could hold that. Next level, 148.87. But like I said, I think 147 is going to be the stronger level, and it would push through to that area in my opinion. Moving over to transports and gold. Gold continues its massive run. Momentum continues to tick towards bullish. RSI breaking out above the SMA, above the 50 line after touching the 200-week moving average. Hit that level, island reversal, big move higher. Now we're back in these previous highs. We're not breaking out above them quite yet, but this does look very bullish. Volume continues to build, and I would expect gold to go higher. In terms of levels, watching this high going back to 18 April, around that 186 area. We got very close to it, but didn't quite get there. And then you have these wick highs up around that 190.30 area, which would be my next price target. In terms of transports, continues to hold this uptrend line. It has to hold here if it's going to do it. We're now below all the EMAs and SMAs on the weekly chart. That is definitely not a good sign. We have done this once before where we came from this same area, pushed all the way down to this 196.20 area. That was the October lows. And if this breaks here, it would not surprise me if we did get a bigger breakdown into that area eventually. Moving over to breadth, 50-day average down pretty substantially after throwing a big wick to the upside, hit that 40 level just for a second, and then broke back down all the way into that 15 range, right back to this previous area that held. Momentum still ticking towards bullish, which is interesting, but 200-day average looks absolutely abysmal. It's now taken out all of these previous lows. It closed on the low. You would expect this to continue down into this 24-25 area, meaning that breadth will continue to weaken, which generally means stock price is going to continue to weaken, which means I will have a bearish bias until we get back into this 24-25 area. Doesn't mean that we're going to hold that level. We have pushed well below it before, back down to this 11 range, going back to June of 22 and then the October lows, which ended up being a very nice area to buy. In terms of the 50-day average, that means we could get all the way down to 2.75, which certainly seems possible at this point. Breadth showing that we are going to have more weakness to come. Moving over to the dollar, we did get a bearish week on the dollar, down about 0.5%. The structure is still very bullish, but momentum starting to show some weakness. We got a step down on the 2 October week, stepped back up last week, and then back down this week. And you would expect this to follow through to the downside at least a little bit. I've been watching this 105.50 area for a while. You would expect we did get very close to retesting it, came up just short, and then rallied off of that level. First test usually holds, and I would expect that second test to move through that area, especially after we've seen about 4 weeks of consolidation at this 106.84 area. And if we do see some dollar weakness, that could potentially point to some bullishness across equities, but that does not mean that it's going to happen soon. We could absolutely hold in this area for a while, and like I said, the structure is still bullish. Moving over to the VIX on the weekly chart, obviously looks super bullish. We've been talking about this for a while. You got the cross, continues to rally up and make new highs on the weekly chart. Still watching this downtrend line up around that 24.60 area. Could overthrow it just by a little bit here. You can see we overthrew it in October of 22 before having that substantial down move. Similarly here, tested it again in March of 23, overthrew it pretty substantially and then had a nice down move. And if we do get into that area, overthrow it a little bit, but it ends up holding and we get another down move, that could give us some bullish conditions in about 3 to 4 weeks. Moving over to my accounts, I was down about $2,600 on the week. So about 2.6%, a little bit less than the NASDAQ, but not by much. The NASDAQ was down 2.9%. The SPY was down a little bit more than 2 1/3, so basically between the two in terms of losses. You don't like to see it. I also have been trading the IWM in my Roth account for a while, and you can see that has gone negative on the year, just like the Russell. The Russell's down about 4%, and this account is down about 1.8%, so still doing okay, but you don't like to see the red numbers there, especially because I was positive on the year. I guess the Russell was positive on the year for a while there too, but now we have crossed into negative territory there. Obviously, I have no positions going into Monday. Everything looks really bearish, and I would expect any rallies to be sold going into the next week. Of course, we have a ton of data and a ton of earnings that will drive market direction, but technically everything looks bearish. Let me know down in the comment section if you are starting to buy bonds at these higher yields and at these much cheaper prices than we've seen in a very long time, or are bonds going to continue to go lower in the short to medium time frame? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.